Hello, dear everyone. I hope you had a great start of the day, and it is actually the right time to discuss our today's data release on the Eurozone GDP, which is about to come out in approximately 15 minutes. So, as usually, I will start with the fundamentals, and then Alexander and Thomas are going to finish up with the technical analysis. So. Just to remind, I will just now put the chart with forecast and previous month's data, and then we can start discussing it. So, first of all, I have to remind you that surely Eurozone GDP is the broadest measure of economic activity and the primary gauge of the economy's health. However, the Eurozone GDP has a rather moderate impact because Germany and France, which account about half of the Eurozone's economy, have already released their GDPs today earlier, meaning that this reading probably will not that much of impact. But yes, data on French and German preliminary GDP are already out. And both are better than expected, since French GDP was at 0.3% instead of 0.2%, while the Germany's GDP also beat the estimates as it was at 0.4%, 0.1% higher than expected. Okay, but let us have a look at the historical chart to see what happened with this reading over the past couple of months. So let me just put it on the whiteboard. So right here we see that yes, the reading has been rather growing over this year, and it reached 0.3% in the second quarter. However, we see that the third quarter's result was seen rather as disappointment when the reading was at 0.1%. But it's sort of understandable since because of the higher interest rates brought about by the Federal Reserve, expected tapering and a slowdown in key emerging markets. So that, of course, all has had an impact on the GDP reading. Talking about today's reading for the fourth quarter of the year 2013. Let us have a look at the estimates. So I will put the top 10 estimates for this reading as well as the summary. So here we can see that the consensus estimate is at 0.2%, meaning that not that much of change is expected in the Eurozone's GDP data. However, I should also add that, yes, the industrial data released on Wednesday was strongly disappointing as it was at 0.5% instead of the forecast at 1.88%. That is why nobody really expects a positive surprise here. But what else I could tell you is the fundamental analysis concept that Dukascopy offers to our traders. And here we can see what traders think, what impact this event will have on the Euro-USD pair. And we see that there is a slight majority who voted for bullish, for this event having a bullish impact on the pair. So we'll see how that will turn out in reality. But so far, that's all from my side. And now I would like to invite Guy to continue with the technical analysis.
Thank you very much, Maya. So yeah, I'll be talking about possible negative impact of the data release. Yeah, and so what you're seeing, I'll be talking about the Euro-United States dollar, right? Then let me just put the slide on the whiteboard. Okay. Yeah, anyway, so until my slides will be uploaded, so why I chose Euro-United States dollar? First of all, due to the current market sentiment, as it 64% of the trades expect depreciation of the pair. So, you know, If the data comes out worse than expected, euro loses ground against United States dollar and the pair trades lower. And now where's my technicals, right? So in addition to that, 56% of pending orders in the 50% pip range are set to go short. 59% of pending orders in 100 pip range are set to go short. Overall, euro is being sold in 59% of the cases. So overall attitude towards the European currency is moderately bearish, and United States dollar is being bought in 65% of the cases. So it is in general perceived stronger than most of its major counterparts. Now the current possible trading strategy is to enter the positions, short positions at the current market price, which is at 1.36875. Put the stop loss at the let's say quasi major level 1.3690, which at the moment is 3 pips above the current market price, and take profit could be set actually at the, let's say, for a very short term reaction around the monthly and weekly R1s at around 1.3684, 83. However, for let's say medium to long-term reaction, something like 5 to 10 minutes after the release of the data, we could look at the recent low. This is the lowest level since, let me double check it, the lowest level since 7 o'clock in the morning, right, and that would be at 1.3678.5. In addition, now let's look at what we are given by the technical indicators. We can see that actually we're getting a little bit different view from the technical indicators, as RSI and stochastic do not predict any major turning point, but trending indicators actually point at further appreciation of the pair, and apparently the last 22 minutes, the bullish bias the pair has been demonstrating for the past 22 minutes is kicking in, and we can see actually it is already testing and approaching the 1.3690 area. I guess having this in mind, let's say in such case, if the pair actually peaks above it, it would be a very good position. Peaks above 1.3690 actually would be a very good position to enter the short positions. In such case, the stop loss should be put at the 200 bar, effectively 200 minute simple moving average, and at around 1.3694, which is located right over here, as you can see. And in such case, stop loss, take profit easily should be set around monthly and weekly R1 at 1.3684, 83 level. I guess. Oh yeah, I forgot to tell that overall, as I mentioned, we can see already the pair peaking above 1.3690. In addition to this, also worth mentioning that clients or in general market participants in other banks, for example, on the trader side, 73% of them are short on the pair. Saxo Bank, 78% of them are short on the pair, and DailyFix show that 77% of their clients and community members expect depreciation of the pair. So yeah, we can see that the pair seemingly is keen to remain above the 1.3690. So I guess small adjustment could be made with for the stop loss to be put at the 200 bar simple moving average around 1.3694, and in such case take profit could be put at the monthly R1 at 1.3684. So in such case, we will have a 4 pip above the 4 pip stop loss buffer and a possible profit of almost 7 pips, taking into account that pair is currently trading at 1.3690. So yeah, I guess for the clarity purposes, I will leave a screenshot on the whiteboard to indicate a new stop loss and take profit levels. That being said, I guess that will be all from my side, and I will give floor to my colleague Alexander, who will talk about possible positives, so that the results would come out actually even better than expected, taking into account, as Maya mentioned, the better data already showed by the France and the Germany. So that being said, I give floor back to you. I give floor to you, Alexander. Will give floor back to Maya afterwards. So yeah, Alexander.
Thank you, Thomas and Maya. So hello everyone. And today we are discussing here EU GDP data, and as you both guys already mentioned that Germany, France and Italy have already published their GDP data, then the market reaction is expected to be rather modest, and therefore our both take profit and stop loss are placed just a couple of pips away from the market price. Actually, the positive price trading strategy, as you can see, is based on Euro-Swiss franc currency pair, and even though it's not a major cross, still some of the technical indicators are speaking in favor of pair's appreciation. Therefore, I've chosen this exact currency pair. So, as we can see that during the last couple of weeks, the pair has not been highly volatile, and last week the pair has been fluctuating in just 65 pips range, while this week the pair has been moving in a boundaries of 55 pips only. So therefore we should not expect major moves after the release of European GDP data. And moving to the positive surprise trading strategy itself, as always, the entrance point is recommended at the market price, which is currently at 122.54. right between daily and weekly periods. Yeah, the potential take profit can be placed around 122.31, and that will be a 4-hour resistance. To be more precise, that's just less than 6 pips from the market price. Regarding the stop loss, first of all, I have placed it around 200-minute simple moving average, which was located at 122.18. However, currently it has moved higher more than 1 pips, and therefore the potential stop loss can be placed at 122.19, so 1 pips above this level. The main reasons behind choosing this exact pair, as I already mentioned, it's strong bullish market sentiment, and we see that more than 71% of Dukascopy traders are holding currently long positions on the pair. Meanwhile, both the single currency and the Swiss franc are sold in vast majority of all cases, while a slight majority of pending orders in the 100 pips range are placed to buy the pair, meaning that the pair is expected to appreciate even in a longer term. While in a shorter term, we see that almost 79% of pending orders in the 50 pips range are placed to buy the pair. And as always, we have prepared a table of market sentiment provided by other market participants, and this time that's data only from Saxo Bank, and we see that 86% of Saxo Bank traders are buying the pair currently. As always, let's have a look at the table with technical indicators, and we see that indicators only on the 10-minute charts are sending buy signals, meaning that in the shorter term the pair is expected to appreciate. However, in the longer term, the pair technical indicators are not giving clear buy or sell signal, and indicators on the hourly, weekly, monthly charts are neutral, while indicators on the 4-hour chart and daily charts are sending sell signal, meaning that the pair can still drop to the key level for the short traders, which is currently located at 122. It's strong psychological level as well as weekly support. So just 1 minute left before the neutral is, and I will open the 1 minute chart. Yeah. And for now, you can have a look at table with all crosses with the single currency actually. Yeah, we see that the data is already out, and actually the Asian nation economy expanded 0.3% compared with the 0.1 growth in a previous quarter. However, we see that the market price is still fluctuating around 122.24, so practically no market reaction. As to the Euro USD, the pair is moving, is approaching the 4-hour support 136.84, and currently the pair has already breached the potential take profit, which was located at 136.84, if I'm not mistaken, and that will be a monthly resistance, if I recall correctly. So actually that's quite interesting market reaction, meaning that the data has improved over the period. However, we see that the single currency is falling down, and currently Euro Swiss franc is trading at 122.24. So yeah, and once again, the negative surprise trading strategy that was based on Euro USD, that included the potential stop loss at 200-minute simple moving average, right at the level of 136.94, while the potential take profit, to be placed at the monthly resistance at 136.84. And that being said, I guess that will be all from my side, and giving the floor back to you, Maya.
Yes, thanks a lot, guys, for commenting on the technical stuff with regards to this data release. So the data came out better than expected, which is good, of course. Let's see how the market will react in the next few hours to that. But before I finish up, I would just like to remind you and invite you to join our today's Dukascopy research webinar at 12 GMT. But for now, have a great time. Drink a nice cup of coffee or tea, and see you later.